My next guest says there could be even more upside for that sector. Joining me now, post 9, is Luke Barrs, Goldman Sachs Global Head of Client Portfolio Managers. Good to see you. Welcome.
Hey, Scott.
You must be reasonably positive on the market if I look at what you think people should be doing within it. Semis, software, advertising, small caps. Have I characterized that right or wrong?
That's absolutely right. And so when we look at the market today, we're not saying beta returns are going to be great going forwards. We're saying pockets of the market offer great value. When we think about the quality businesses within the tech ecosystem, within parts of the industrial ecosystem, as much as there's a lot of anxiety around recession risk, we still think that's a low probability outcome. Debt ceiling is very likely we see some resolution, and we can get these great businesses right now where the market's putting a lot of anxiety into a way that we don't think is necessary.
Do you think that this move today is in part optimism around a deal?
I think in the short term that's what the market is looking at. Though let's just be frank, the market stayed fairly flat, even with some of the anxiety we've seen over the last couple of weeks. What we're really saying is taking a longer term view, the market is misjudging the quality of fundamentals in some of those technology businesses. So you referenced semis, great case in point. We have an underlying industry that is foundational to many of the major tech innovation themes that we see today, whether it's AI, whether it's automation technologies. And so for us, if we can find those businesses that have unique capability that are still being traded in a way that reflects last year's environment where the access to capital was more challenging, the discount rate was having to increase, but with the certainty we have today, it's a very different starting point.
I mean, the house view at Goldman Sachs, as articulated well today by David Kostin, was pretty cautious. Muted returns, 1 in 3 chances of recession. Do you not share those views?
Share those views. 1 in 3, I still think that's 2/3 in our favor. But I think when we take a step back and think about the pockets of the market that we're looking at, that can be significant dispersion at stock level outcome.
Yeah. So you think this AI run has a little more room to go? It's obviously all the rage. It's what everybody continues to talk about. Even as valuations have gotten more elevated in the early part of this year, how do you address that?
So AI, first and foremost, transformational theme, in our opinion, actually probably the biggest transformational impact to the technology landscape since we've seen the introduction of the internet. When we think about it in a public market context, it's really early. So let's just level set where we're starting from today. You have to be very thoughtful on how you take exposure within that. There are opportunities in the large cap space where we have very interesting AI capabilities. What's very interesting, take Microsoft, great case in point, the pricing model in Microsoft is avoiding commoditizing that AI capability. It's allowing businesses to access it, but pricing it at a premium that's very accretive to long-term earnings. When we look at the picks and shovels, which is really where we want to play this theme, it's the semiconductor, semi-cap equipment businesses that are going to be benefiting from that transition towards AI, especially those that have unique capability.
Can we talk small caps? Because I feel like maybe it's the most controversial part of your view. In that if you think there's 1 in 3 chance of recession,
yep.
If you think that returns are going to be somewhat muted and this overhang of recession fear is going to be with us for the, let's say at minimum, the very near term, how do small caps work in that environment?
Well, let's just remember, we've had 10 to 12 years of small cap underperformance. Without wanting to suggest history always rhymes perfectly, these cycles tend to go in 10 to 12 year cycles. And when we look at the small cap space, we're trading now 40% discount. Russell 2000, 40% discount to S&P 500. The long-term average is 7%. So if we think about some of the higher quality businesses, and let's think about reindustrialization of manufacturing in the US as we see that re-offshoring from Asia and from China, who are the beneficiaries? Some of those industrial automation businesses, some of those construction commodity businesses, that's in your small cap universe. Look at the healthcare space, especially biotech. Biotech's been beaten up for a couple of years. We understand why. Access to capital has been more challenging. These are pre-profit businesses. They need to fund that growth, fund that commercial path. But this is a point in time where genomic technology, precision medicine, some of the therapeutic solutions we're going to deliver in the next few years is transformational to that industry.